Hello, and hi everyone. Welcome on screen again. Feel like it feels good to see you on screen, especially at this time as we have just uploaded a new video in this channel. Thank you, fella, for being here, and thank you for being considerate to Rita Finance YouTube channel. And with that said, I'd like to take this opportunity to welcome you in Rita Finance YouTube channel. And if you're new to this channel, warmly welcome. Subscribe to it. And if you're a regular viewer and you're yet to be one of our subscribers, please feel free to do so. Consider to be one of our subscribers by subscribing in this channel. Share this video with your friends, loved ones, workmates, schoolmates, relatives, or with anyone who you think is going to benefit from the teachings that have been provided in this channel. Don't forget to like this video as well and click the notification bell so that you can be notified once we upload a new video in this channel. My name is Rita JL and warmly welcome in today's episode. So fella, in today's episode, it's all about finances, and guess what? We're in the banking industry where we are going to learn about how a saving account or your bank saving account can help you meet your financial goals and planning. And without further ado, let us go to the details of the story. So fella, your bank accounts can be a very good tool for you to make easy to achieve your goals and also to stay well organized with your finances. Banks often allows you to open multiple bank accounts, and you can open separate saving accounts and name them for you to meet specific goals, like maybe it's a saving account for you for school fees of your kids, or for your own school fees, or for vacation, or a saving account for you to make a down payment of your house or for rent purpose. So it depends on the intention that you have for you to open that bank saving account. So with clear timeline and targets, now you can open a saving account, and you have to consider the following issues so that the saving accounts which you have opened can help you now meet your financial goals and planning. Number one, set your saving goals earlier. So set the saving goals early for you having this bank saving account. So building a saving bank account isn't easy, as there are so many demands from your income and everyday to-day expenses to meet in daily life. So it's important though to determine now what you want out of your life and do a little bit planning of where now you want to go and where you want to meet and the certain amount, the certain financial goals that you want to achieve at a specific period of time. So with meaningful goals, you may have a motivation now to set and open this saving account. So given the motivation that you have behind opening the saving account, so you have to set a certain goal. Given the drive that you have in mind, you want to achieve a certain goal. Now, after you have set this goal that you want to achieve in mind, so you now set the saving goals and open a saving account for you to achieve that specific goal. So number one, as you said, you have to set your saving goal. Number two, you have to estimate how much you're going to set aside per income. So this depends on how now your income comes in your accounts. Maybe are you getting income per month or per weekly, depending now in the source of income that you have. So you have to decide how much now you want to set at a specific time. Maybe it's for monthly or weekly. You're going to set a certain amount of money set aside for you to meet various purposes. Are you going to save now 20% of your income? Are you going to save 10% of your income or 50% of your income? So now this is depending on the amount of income that comes your way, and you can say, now given that I have a certain goal to achieve, so for me to achieve this goal at a certain time, maybe it's for 1 year, each month I'm going to save 20% of my income, or each month I'm going to save 10% of my income, or 50. So it depends now with your goal and the amount of money which you want to have to achieve that specific goal. So decide now, as income comes in, what percentage of your income are you going now to set aside for your saving? Number three, you have to set automatic savings. So give it to your bank or tell your bank that you want to have maybe a standing instruction for you to put a certain amount of money in a certain account to build up a saving. Or there are some different products, like one of the products which I know the certain bank is called spending to save. So you have to automate saving for it to be easy to accumulate money in the saving accounts rather than you doing it manually. So you can ask your bank, how can they automate saving into your saving accounts, and they can do it immediately after funds have hit into a specific account. Then they take that fund to a specific saving account that you have set it intentionally for you to accumulate saving for your financial goals. Number 3, monitor progress and adjust as when needed. So you must keep in track of the progress of your saving account. Maybe you have to monitor it monthly or quarterly or semi-annually. So you just don't wait until the end of year you now go to track. No, have the tendency of tracking it at a certain period of time to check the progress. Now, are you about to meet the specific target that you have set yourself, that you're going to save? Maybe it's 100,000 in per year. So now you have to keep in track how much have you kept in 1 month or in certain quarter. And as you see the progress is going, are you going to meet that specific amount of money at a certain time period that you have set? If it's not, you see that it's not going to meet, you have to adjust now, and maybe you have to increase some little bit amount so that you can reach the goal that you have intended to do at the end of the year. Number 5, you have to separate saving from day-to-day expenses. So don't use this saving account, which is specifically for a certain purpose, for you to run day-to-day expenses. You know, saving accounts are for reserves and planned financial goals, not to run day-to-day expenses. As day-to-day expenses, you can use that in your current accounts. Maybe the current accounts can be used for you to pay bills and to day-to-day transactions via your debit card purchases. Maybe you're doing things or paying things online. You can use the credit card for that. So don't mix this don't use the saving account which you are intending to build a reserve, or intending for a planned long-term or short-term goal to do day-to-day expenses. So for day-to-day expenses, you can use your current account. So thank you, fella, for listening, and I'm glad that you have learned some few things from this video. And until next time, this is Rita JL. Don't forget to tell a friend, to keep it logged with the Rita series. Until next time, bye-bye.